Joining me alongside Mr. Jeff Kleintop is Kathy Jones, which means we get to talk some bonds, which is perfect on FOMC. So, all right, I got a little mix up there. Mr. Kleintop, a Chief Global Investment Strategist, joining us. Kathy, let's talk FOMC first. Was there any key kind of takeaway from you relative to what we heard from the smattering of speeches by Fed officials the past week?
Yeah, I wouldn't say it was anything super surprising there. There was a reference to various members indicating that they'd be willing to hike rates if inflation doesn't improve. That was a little surprising. Various is a word that isn't used very often in the Fed minutes, so I guess that means there's a handful. I'm not really sure how to interpret that number, but hypothetically, if inflation didn't do well, the Fed would agree to hike, but I don't think that that's a big surprise. There was also some conversation about, well, is policy really as restrictive as we think it is? Again, no conclusion appears to have been drawn, but that's interesting. And then I think the third takeaway was there was the discussion of QT, and some members seem to feel that they'd like to continue as it was rather than taper, but we know they agreed to taper at the meeting. So all in, not a huge surprise, a little bit of a hawkish tone, but otherwise nothing really new in the minutes.
So there was actually a discussion around tapering, which is kind of now, to your, as you mentioned, kind of a trailing, event as the decision has been made. But when it comes to rates, the data dependency, I guess, is real. It's kind of one of those things where it seems like they've always intimated, they would hike if things went the other way. Would you say, Kathy, that they were more explicit in putting that out there? Because we should be able to imply that based on what they've told us, right?
Yeah, I think putting it in the minutes or keeping it in the minutes was a pretty significant signal to the market to say, yeah, we really are fighting inflation here, and that's our primary goal. They also took out the reference to the peak in rates might be behind us. So clearly was kind of shot across the bow, like, pay attention, we are on the inflation fighting pathway still.
It's this kind of effect that we've seen many times before, Jeff, where you could follow the logic of what the Fed says and come to conclusions, but when they actually say something to confirm, yes, this does work the other way, just like we'll cut if things go super cool, and we'll hike if they get really hot.
Yeah, I guess it's a little, I guess the market thought that Powell put the idea to bed, and clearly, there's a little bit more dissension within the overall FOMC. I think what's interesting today is, we know the dollar popped on this for obvious reasons, right? Higher rates for longer means the dollar's going to be a little bit stronger, but there was one currency that actually did a little bit better today versus the dollar, and that was the pound. And that's because it's a little competing race here, and who can be more hawkish today? We had April CPI from the UK today. Now it fell a lot, down to 2.3% from 3.2 in March, very close to that 2% target. But it was a little disappointing, Oliver, because the economists thought it was going to drop to 2.1. And for services inflation remained pretty sticky. And that took the odds of a June rate cut from 55% yesterday to just 13 today. And that led to that rise in the pound versus the dollar. But let me point out there's one more inflation reading in the UK before the next policy decision on June 20th. And last year, that May reading was a very hot 0.7%. That's going to drop out. Actually, that even pushed the Bank of England into a 50 rather than 25 basis point hike at the June meeting the following day a year ago. So that tells me two things. One, the BOE can be very sensitive to the latest data point, and we're going to get a big monthly drop out of that calculation. So the market could be overreacting to today's UK CPI number relative to what they heard from the Fed. So I'd still think there's a June rate cut on the table, but the odds still remain around 50-50. Even though the market's dropped them well down to what, 10, 15% today.
Okay, so that's a pretty important nuance within the print, because I'd kind of been describing it the wrong way, just looking at sort of the top line from earlier this morning, the fact that the actual odds of the cuts dropped. But the fact the dollar then rallied back and came back so firm, I guess, is still that kind of notion that they're still going to go before us. It may just not be at the same month. So it's like we're all kind of shifting down the timeline, and the spaces between each central bank seem to be fairly consistent.
Yeah, I mean, we're not talking about, years apart here. We're talking about months, meetings, really. But given how much has been tied up into, where financial conditions are, where currencies are, I mean, you get a little bit out of every move. And certainly the market has been very focused on that return of liquidity from central banks and easing financial conditions. Not that they're tight, but just that they might get even easier. It is something that's moving the market, particularly on a day when you've got a stock like Nvidia reporting and there's so much focus on above average valuations. Can we sustain those? That would certainly be aided with the return of more liquidity from central banks.
Okay. After Nvidia tomorrow, we got jobless claims, we got durable goods on Friday. We've got a few prints. Kathy, how do these rank in terms of importance for you?
Yeah, I would say jobless claims probably the most important. It's a high frequency indicator of how the labor market is doing, and that's very, very important right now in terms of the outlook. Since we had that somewhat, below expectations reading on job growth last month, the jobless claims have been edging higher. The continuing claims have been edging higher. So I think the market's going to be very sensitive to this and watching it very closely to see if that's a trend or if that's just a bump in the road, as Jay Paul would say.
Yeah, good reminder. Our last couple numbers there were pretty weak. Jeff, last thought from your global perch. Are you watching Nvidia as a read-through on U.S.-China relations? Give me a quick thought here on what matters to you.
Yeah, I'm studying this report mostly for the impact of export restrictions on sending Nvidia's most popular chips to China. That's going to become a bigger deal, not just for chip makers in the coming quarters as trade tensions continue to climb. On market leadership, Nvidia is helping to mask the outperformance by international stocks this year. And without leadership by these Mag 7 names, particularly Nvidia, you could really begin to see more of that international outperformance. So going to be watching closely. This is going to be an important report for market leadership.
All right. Great stuff, team. Thank you very much. Jeff Kleintop, Kathy Jones. Great combo there.